Next, labor turnover. Labor turnover. Labor turnover. Labor turnover measures measures the rate of change. Measures the rate of change in company's workforce. Measures the rate of change in company's workforce. Change can happen. Change can happen due to change can happen due to employees leaving the company. Due to employees leaving the company. Employees leaving the company, technically called separations. I'll explain in a minute. Employees leaving the company, in brackets separations, or new people getting recruited, getting recruited, getting recruited in replacement of people leaving, in replacement of people leaving, new people getting recruited in replacement of people leaving. It's called replacement. Or new people getting recruited for expansion. For expansion, write it and I'll explain. New people getting recruited for expansion. New recruitment. New recruitment. Okay, now what is labor turnover is? Okay, let's understand labor turnover. See, this is one of the important metric which an organization would want to monitor to control labor cost. Labor turnover measures the rate of change in company's workforce. What is changes? Today I am taking a class. Next batch someone else takes a costing class, or every 5 days we change a faculty. Every 5 days, if I change a faculty for a subject, it will become extremely difficult for the students to understand, because every faculty has their own style of teaching, and if I keep changing faculty for a subject, it becomes difficult. So in an organization, objective is there should be very minimal change in workforce. I don't want the workers to change, because when workers do not change, they get used to the manufacturing, they get used to the productivity, they get used to how it is to be done. So all benefits I get. If new people are coming in, I have to give training to them, I have to recruit those people, I have to when they are working, they will not be fully effective, they are trying to do manufacturing and wasting a lot of time, so idle time will start getting created. So objective is I don't want any change in workforce, which is impossible, but still minimal is preferable. How can workforce change? I started with 100 employees. In the 100, 20 people left the company. 20 people left the company, so 100 became 80. Now what the company did is, whoever left, I did not replace everyone, I've gotten only 15 new people in place of them. They are called replacement. Number of employees went back to 95. From 100 we came down to 80. From 80 we went back to 95. Then company said, I'm putting up a new project in some other place, I'm putting up a new project and I need 50 people for that. I need 50 people for that. They are called new recruitment. So in case of Bharadwaj Institute, if one faculty leaves, they are called separation. If I replace a new faculty in place of that old faculty, the person who is coming in is called replacement. And if I introduce any new course and take classes for that and bring in a faculty, that's called new recruitment, because I'm expanding. So our objective is to calculate what is this rate of change. We have multiple methods for doing that. Now before doing that, next, right, reconciliation of workforce. Reconciliation of workforce. particulars and amount, reconciliation of workforce, particulars and amount, opening workforce, I'm writing some random number, okay, 1000, opening workforce 1000, less separations, less separations 400. It's a big number, but okay, less separations 400. 400 people left out of these 1000. Add replacements. Whoever went out, I brought in few people. Person could leave now, person could have left in the last year. I don't know. If you're replacing somebody, you can immediate replace or replace it later. In short, replacement number can even be more than 400. Replacement can even be more than 400. How is it more than 400? Some 400 people left in the last year, another 400 left in the current year, and I've replaced them with 600 in the current year. I've replaced them with 600 in the current year. You can leave last year, you can leave current year. Replacement write 200. I'm writing 200 only. But indirectly replacement can even be more than separation, can even be more than separation. If you take it for a overall time period, that is if you take for a 5-year period, then separation has to be higher than replacement. I cannot replace more people than who are leaving it. If you are replacing more people, they are technically called by a different name. The different name is called new recruitment. Any doubts on this? Then add new recruitment. Add new recruitment. 700. Closing workforce. Closing workforce. What's the closing number? Now, this rate of change I measure using multiple methods. Methods are fairly simple. You will get to the answer also in a simple manner. But let me first discuss the methods. First method is called separation method. What is separation method? Is number of separations divided by average workforce. What is average? 1000 plus 1500 by 2. So 400 divided by 1250 is called separation method. 400 divided by 1250. The name of the method will give you the formula. Second method is replacement method. 200 divided by 1250. 200 divided by 1250. Third method is called new recruitment method. New recruitment method, which is 700 divided by 1250. 700 divided by 1250. Separation method focuses on only separation. Replacement method focuses on only replacement. New recruitment focuses only on new recruitment. And we have a method called flux method, which focuses on all the three. That is separation plus replacement plus new recruitment. I'll give formula in some time, but the approach is very simple. First method is called separation method. Number of separation by average workforce. Replacement method, number of replacement by average workforce. New recruitment method, number of new recruitment by average workforce. Flux method, number of separation plus number of replacement plus number of new recruitment by average workforce. And there's another method called accession method. I'll give a formula to that. Totally I have 5 methods. Every method denominator is 1250. Numerator can be 400, numerator can be 200, numerator can be 700, numerator can be 400 plus 200 plus 700, and there's another method which takes only 200 and 700. I'll explain the method, but totally we have 5 methods. Totally we have 5 methods. For every method, denominator is average workforce, numerator can be only separation, only replacement, only new recruitment, all the three are only 2 items. What is that 2 items? I'll discuss. Any doubts on this? Now right below methods. Methods. First is separation method. Separation method. Separation method. Number of separations. Number of separations divide by average workforce into 100. Number of separations by average workforce into 100. Calculate and write the answer. Average is average of opening and closing into 100. How many separations are there? Average 1, 2. So divide How much? 30. Okay, 32%, which is a very big change. This means 32% of my workforce is leaving the company. 32% is leaving the company, which is a very big number. It's a big number. Any doubts on this? Next, the name itself will tell replacement method. Replacement method. Number of replacements by average workforce. Number of replacements by average workforce. How many replacements are there? Divide by 1250 into 100, how much? Then new recruitment method. New recruitment method. Number of new recruitments. Number of new recruitments by average workforce. How many new recruitments are there? 700 by 1250 into 100, how much? 56%. These are extremely big numbers. It's a caution for the company, because if replacements keep happening, recruitments keep happening, and separation keep happening so big, the composition changes a lot. If composition changes, then you have to keep training people. Accession method, ACC, accession method, ESSION, accession method. Write the formula, I'll explain the logic of the formula. Number of new recruitment plus replacement. New recruitment plus replacement. New recruitment plus replacement. Number of new recruitment plus replacement. Now, what is accession is very simple. Number of people coming inside the company, whether you are replacing a person or coming for expansion, both are included. Number of people coming inside. The term accession basically indicates number of people who are coming inside the company, could be for expansion purpose, could be for replacement purpose, both put together. So what plus what? 200 plus 700, so 900 by 1250. And last is flux method. Flux considers all the three: new recruitment plus replacement plus separation. All three are included here. All three are included in the calculation. No sign and all. Separation is 400 as it is. Don't put minus 400 and all. No signs there. Number of new recruitment, replacement plus separation. All put together how much? It's a huge number. 1300 on a base of 1250. 100 and, which means my entire workforce has changed. My entire workforce has changed. 104% indicates who were there at the beginning of the year. Technically, you may not find them at the end of the year. Technically, you may not find them at the end of the year. Well, some people may continue, but still, there is a huge change which has happened. 104% is the composition change. Different methods have a different way of calculating. We have 5 methods to do the calculation. So, separation, replacement, new recruitment, accession, and flux method. Any doubts on this? Clear? Can you proceed? Let me know if there is any doubt. Okay, next, equivalent annual turnover rates. Equivalent annual turnover rates. Equivalent annual turnover rates. Now, whatever formula I gave can be done. For example, I just add one data here. Opening workforce of January, and this is closing workforce of January, which means within 1 month, so much change has happened. If you want to do it for a year, into 12, you have to do this. Into 12, that is 104 into 12 is 1200%, which means within a year, 12 times labor is going to change. Within a year, 12 times. So this data could be given for a month, could be given for a year, could be given for a quarter. If they give for a year, whatever you have calculated is per year. If they give for a month, what you have calculated is per month. Now, right, equivalent annual turnover rates is equal to equivalent annual turnover rate equal to rate is equal to normal rate into 365 by number of days. 365 by number of days or 12 by number of months. 365 by number of days or 12 by number of months. See, my objective is very simple. I don't want any change to happen. But if it's happening, I can do calculation on a every month basis. Every organization, practical world, tracks this number. Companies like TCS, Infosys, IT company, they release this number every quarter. When they are preparing the financial statements, every quarter, listed company, when they declare the results, they'll say attrition rate is how much. Attrition is how many people have left the company. So they will declare this number in their presentation, because if attrition goes up, it's a problem for these companies, because if people are leaving, because anybody who comes, I have to spend good amount of time in training them. After training, if he is not working for a longer period, the organization, because even in the training period, you have to pay salary to the employee. So that is why time, if it gets wasted, it leads to challenges. Clear? Any doubts on this? Any doubts on this part?